Hey everyone. Okay, so this will be the last video for today. I had to come back to office to do some work and it's about 10 o'clock at night and I'm recording this video for the CPI data because with all the SoFi craziness, we forgot to talk about or we didn't discuss CPI, which is going to be a key point or I would say key catalyst for the markets. So I'm going to give you a little take on what I just read on Bloomberg and also share my opinion on where I see the CPI data come out tomorrow. Also, what is the expectation after the CPI data comes out? Because two things is going to happen. Remember when we had that the data for the interest rate hike from Fed FOMC meeting, and we had that crazy market gain, 500 some Dow gained within a day, and there was a huge rally, and we all felt like, okay, markets are back, bulls are back. But then what happened? We had a huge sell-off right on Thursday and Friday. I was expecting Friday. So if you have missed that video, I'm going to link it towards the end of this video about the FOMC because that was a very interesting video. We could see the events unfold in front of us. So now tomorrow CPI data is coming out. And CPI data has been one of those things that has driven the markets, driven the FOMC, and driven the investor sentiment. So when CPI comes out with the numbers, there are few expectations that analysts are expecting. And of course, everybody, regardless of who I speak with, I've spoken to some of the actually analysts, I've spoken to some of the people that I work with about their thought on the economy. And everybody has a feeling or everybody is thinking that inflation is going to come down. Inflation has peaked, inflation is going to come down. So let me share what I think is going to happen. And also towards the end, I'm going to share my view on the stocks and how the stock is going to, or how the market is going to turn given that, or what to look for when the CPI data comes out tomorrow and also day after. So I'm going to share my screen and I will quickly show you what Bloomberg is basically saying. So this is Bloomberg, and this is their expectation of the CPI. So the headline consumer CPI data will likely come down as per Bloomberg, as you can see over here. And it was, of course, very sharp up increase in March. As we know, it peaked in March, and now they're estimating that the CPI data is going to come down, and especially a sharp decline in the headline consumer price inflation, and basically 0.1% month over month versus 1.2% that they had over in the previous month. So if they had 0.1% month over month right here, as you can see this red line over here, that's going to drop the year over year inflation to 8% from 8.5% that we had in March. So that's going to be a really good thing. Then on top of that, they're estimating that the core CPI, which is basically food and all those other things, is going to rise 0.3% month over month. So it's not going to rise that much, only 0.3% month over month, as compared to 0.5% over the past 12 months. So it has been going up almost 0.5%, the core inflation, which is that you can see over here, food, and you can see that how it's increasing. And this time it's not going to increase that much. And that's why they are saying the core CPI is going to come down to 5.9% versus 6.5% that we had in March. So that's, of course, another good thing to note, that the economy is still strong. And the reason why economy is still strong is because people are spending money on travel, tourism, and food and other places. But here's the thing, people don't have a solution. People have to spend money to eat. People have to spend money to basically get out of this COVID time that we have been living in. So I feel that we are seeing a lot of that right now in the economy, which is all a good sign, but it has to sustain more than a month or more than a summer for us to feel that we are going in the right direction. On the other hand, inflation is still firming in several other different core services. And I mean, we are talking about rent. It will peak close to like 7% year over year in the second half of 2022. They're not even talking about, and now they're talking about in the second half of 2022, which was 4.4% in March. So now they're estimating about 7%. So I feel that peak inflation may be past, maybe it has happened, but the climb down from the 40-year-old high that we had, 8.5%, is going to be really slow. And the bear case that Bloomberg is reporting is that inflation will fall to 6.3%, but only in the fourth quarter. not right now. So right now we are going to be at 8%, and then as we go into the fourth quarter of 2022, then we can see inflation come down to about 6.3%. Energy was such a big contributor before, but now it's kind of non-existent because energy prices have come down a lot. Now, still they're not where they were 6 months ago before the Russia-Ukraine situation, but China lockdown has really helped the energy prices to come down because the demand has slowed in China a lot. But where could the CPI surprise come from? So the estimate is that the core inflation 0.3% month over month or 5.9% year over year is slightly lower than the survey median that they had. It's 0.4% is what they are saying, or 6% year over year is what Bloomberg is estimating. And the difference is likely that because we are seeing bigger price in several consumer categories. For example, I mean, furniture, appliances, recreational good, clothing, all of these are basically right now at a higher, or people are spending more money on the same goods that they were spending 6 months ago because of the supply chain issues. So I really feel that the CPI number is going to play a huge role in the stock market for tomorrow, and I'm going to explain the next steps now. So if CPI data come out with the analyst expectation, then what we are going to see is we are going to see a rally where people, those who are, or those short people, or the companies, those who were shorting, or hedge funds, those who were shorting the stock, they're going to come out and they're going to cover the shorts. That's what happened on Thursday when FOMC announced, and all of a sudden, when people were thinking, okay, 75 basis point could be possible, and all of a sudden, when Jerome Powell came out and said that 75 basis point is out of the table, the market just rallied. And when market rallied, the market makers or the hedge funds, those who were shorting so many different stocks, they got worried. They're like, okay, we need to come out and we need to basically cover our shorts. And we saw that insane rally just on Wednesday in like 2 to 3 hours. And then Thursday, they came back again. And people, those who were sell the bounce, as I've used that in before, people came out and they start selling it, start taking profit. And when they start taking profit, shorts came out and they start shorting. So this is such a vicious cycle that's going to continue with any report that comes out for at least next few months. Because we saw, right? I mean, SoFi reported such an amazing quarter. The stock just goes down and just tanks 18%. Just from a glance of the numbers, I could see this was a very strong report. But yet again, and I'm gonna discuss the whole report in detail. But what I'm looking at for CPI data tomorrow is that if the core inflation, which is 0.3% month over month or 5.9% year over year, if it comes out to that number, because remember, we were 0.5% year over year for a long time, or month over month for almost 12 months. So if that reduces, that's a very bullish sign for the market. It'll just go up, prop up, where the shorts will come out. They will try to cover it. And then after a day or so, there comes the profit taking, even from the retail investors. And even then the shorts will come out and they will play the game again. So be very careful of what we see tomorrow at 8:30 in the morning. I will be watching the market. I'll be making sure that wherever the market decides to go, I'll take advantage of that. Even if the market is going lower, if it market crashes, let's say we have a surprise in CPI and the number comes out bad, then at that time, the drop we are going to see is also going to be temporary. Because I feel when the market drops all of a sudden, say 500 points, then it's going to come back the next day. So I'm going to take advantage of even that by basically, buying some, selling some puts tomorrow for the stocks that I want to own. But if the market rallies tomorrow because the CPI data comes out and which is very, very strong, I'm definitely going to take advantage of that by selling covered calls on the positions. So it's going to be interesting because it's just a day after SoFi released the earnings, and also we have this huge I would say news, which is people have been waiting for a long time, because this CPI data is going to give direction to the Fed for next meeting. 50 basis point increase is definitely a done deal. That's happening. But if we get a surprise, then 75 basis point, even though Jerome Powell said, it's 75 basis point is off the table, but I think it's very easy to walk back on those words if the inflation is the main problem. Because even President Biden said in a speech yesterday that controlling the inflation is their number one priority, more than unemployment. They have to control the inflation. So Fed has a very hard job, of course, but I feel CPI data is going to give direction to the Fed. So I hope you liked this quick update, and I'm I'm going to actually be looking at the CPI data, and we'll do a post CPI data video to kind of break down exactly what I see in the report and where are some red flags or where are some green flags and what to make sense of in the coming days. Thank you so much for tuning in. If you like more update, then consider joining our Discord and Patreon. Links in the description below. And also like the video and subscribe to the channel if you're new, if you like updates like that. Until next time, you all have a sparkling day.